This is Softeller Tech Briefs. Today we're looking at how optical character recognition, OCR, in invoice recognition software is reshaping business automation, from manual accounts payable to intelligent integrated financial workflows. Not too long ago, invoice processing was something businesses had to handle largely by hand. Teams spent thousands of hours sorting through documents and typing vital invoice details into databases and ledgers. That approach was common, but it was time-consuming, inefficient, and prone to errors. The manual side of the process often produced misunderstood invoice data, which delayed vendor payments and sometimes affected future purchases and procurement. As invoice volume grew, so did data errors and financial losses, until the drawbacks of manual document processing became impossible to ignore. Corporations began searching for faster, more effective ways to read and process vendor invoices. As enterprise resource planning systems gained popularity in the late 1990s and early 2000s, software vendors started integrating optical character recognition into those systems for automatic capture of invoice data. That development revolutionized accounts payable operations by reducing reliance on manual data entry and making it possible to capture data from invoices in many formats in just seconds. In today's business environment, automatic invoice recognition is a critical part of how modern companies operate. It gives organizations greater visibility into spending and growth opportunities, and it has streamlined payment workflows to the point that companies across retail, manufacturing, transportation, construction, and education use OCR-based invoice recognition in some capacity. A stable backend is also essential for correct implementation, which is why robust server-side development is often part of a serious invoice recognition rollout. Let's start with the foundations: invoice capture and OCR, and how they work together. Invoice capture and optical character recognition are the ideas driving contemporary invoice processing. Together, they shape how effective accounts payable systems are, but they play distinct roles in helping organizations streamline financial operations. Invoice capture is the process of collecting and digitizing data from various vendor accounts into a centralized processing system. It uses invoice capture software to identify and extract critical data from different invoice formats. In recent years, invoice capture software has greatly improved how accurately businesses parse data from vendor invoices. That has helped finance teams maintain better records and stronger relationships with suppliers and partners by reducing processing time and minimizing human error. The technological core of invoice capture is OCR software, which converts unstructured invoices into organized, easy-to-work-with data. Invoice scanning software uses OCR to digitally read invoices from many sources, paper documents, PDF files, email attachments, and turn them into structured data ready for accounting software or an ERP system. OCR software identifies different invoice formats during processing and accurately collects relevant fields despite layout variations. The extracted data, line items, dates, invoice numbers, payment details, is checked for accuracy, which improves data quality and reliability. By turning scanned invoices from disparate sources into structured, searchable data, OCR simplifies the document processing cycle, speeds payment turnaround, and supports stronger compliance and transparency in financial operations. For many businesses today, an agile, efficient, and precise payment disbursement system isn't optional. It affects cash flow management, financial reporting, compliance audits, and fraud prevention. Automatic invoice recognition makes that kind of system possible by removing the need for manual handling in invoice processing, and it delivers several concrete benefits. On error reduction, manual data entry invites mistakes, wrong invoice numbers, miscalculated figures, incorrect dates. OCR reduces most of those errors by pulling relevant data directly from invoices with high accuracy and consistency. The result is invoice data finance teams can trust without costly delays spent fixing errors. On efficiency and speed, traditional invoice processing slows accounts payable and creates bottlenecks. With OCR-based recognition, invoices in different formats are quickly digitized and integrated into accounting or ERP systems. Some organizations also build mobile-friendly interfaces so finance teams can review, approve, and process invoices on the go. Automation speeds the whole AP process and can shrink turnaround from days to minutes, freeing staff from routine admin for more strategic financial work. On cost savings, OCR delivers real financial returns. As manual effort drops, operational expense often drops with it. Faster processing also helps companies use favorable payment terms, including early payment discounts, for meaningful annual savings. Over time, self-learning OCR improves accuracy further, compounding efficiency gains. On compliance and financial accuracy, OCR in invoice automation increases transparency and regulatory compliance. Automated systems pull and validate amounts, vendor names, line items, and related fields. Standardized processes make audits and financial governance easier and help companies meet regulatory obligations more consistently. Now let's look at the essential components of OCR invoice recognition software and how they work together. Every OCR solution starts with a robust invoice scanning module. It converts incoming invoices from email, PDF attachments, or paper into high-quality digital images ready for processing. Quality at this stage matters directly for extraction accuracy. At the center is the OCR engine, which converts scanned invoices into searchable, structured digital text. Advanced algorithms identify and capture key information across diverse formats, often without relying on rigid templates. OCR alone doesn't guarantee accuracy, which is why a data validation module matters. It matches captured data against current records or predefined business rules, flags discrepancies and possible errors, and ensures only validated data reaches accounting or ERP systems. Modern invoice OCR software often includes machine learning that continuously improves accuracy and throughput. By learning from past invoices and user corrections, recognition gets better at varied formats and complex layouts. Finally, the integration layer connects the OCR application to financial systems, accounts payable platforms, and related tools. Well-built, type-safe integrations help structured financial data flow smoothly into business workflows without friction or data loss. In practice, the path from invoice receipt to recognition is straightforward, even when the technology underneath is complex. It begins with capture and digitization. Invoices of all types are collected and converted into clear digital images. Next comes data extraction. Algorithms read text from those images and organize invoice fields. Then validation. Captured information is checked against preset criteria or existing data. Last, integration. Verified data flows into the company's financial systems, improving accounts payable, streamlining approvals, and strengthening overall financial management. How are companies using OCR in day-to-day operations? One major use is automating accounts payable end-to-end. OCR tools gather numbers, dates, line items, payment terms, and vendor details, then map that data into AP systems and shorten payment cycles. Less manual intervention means fewer delays and more consistent access to early payment discounts. Another is invoice scanning and digitization, turning paper bills, PDFs, and electronic invoices into structured electronic information during capture, so financial records stay accessible and organized. A third is automated data entry and validation. OCR extracts data from varied invoice formats and cross-checks it against internal databases, historical records, or defined standards before anything posts to accounting systems. A real-world example illustrates what this looks like at scale. A SaaS-focused software company hit a wall with manual invoice processing. The volume and variety of vendor invoices slowed finance teams and delayed accounts payable. Manual extraction produced frequent errors that took a long time to find and fix. Slow recognition held up approvals and payments, strained vendor relationships, and caused the company to miss benefits like early payment discounts. The response was an AI-based invoice recognition system built on Microsoft's Azure Cognitive Services. The solution used a React front-end and a .NET back-end, with an interface that let users upload invoices, review extracted fields, and correct data when needed. When the system went live, the impact was immediate. OCR sharply reduced manual entry errors and improved data quality. Accounts payable spent less time on repetitive work and more on higher-value financial tasks. Operations ran more smoothly, vendor relationships improved, and the company had a stronger foundation for growth, a practical demonstration that AI-driven OCR fits modern invoice processing and contemporary corporate operations. To close, optical character recognition has redefined how businesses handle critical financial work like invoice processing. It has evolved from a basic text reader and image scanner into a major driver of workplace automation. Organizations that adopt cloud-based OCR in their workflows often see gains in operational efficiency, cost savings, and employee productivity. As artificial intelligence and machine learning are woven deeper into these systems, error rates continue to fall and the technology becomes more reliable for financial insight. Still, implementation isn't only about speed and accuracy. Security of financial data, vendor details, account information, and other sensitive business data has to be central. Any business adopting OCR for invoice processing should carefully evaluate its workflows, its chosen OCR platform, and its accounting systems to ensure long-term compatibility and trust. The key takeaway: invoice recognition powered by OCR isn't a narrow IT upgrade. It's infrastructure for faster, more accurate, more compliant finance operations at scale. If you'd like to learn more about software development, AI, cloud, data engineering, and digital transformation, visit us at softeller.com.